Hello everyone, welcome to JAIIB CIB English Medium. My name is Aarti and I hope you all are doing good. So if you're also planning to clear your CIB in your first attempt, then do watch this session. This is specially designed for your upcoming ABFM exam. So if you're visiting to this particular channel, do subscribe it and share with your friends and colleagues so that they can also get the advantage of this channel. Yes, so let's start with today's session, but let me tell you one very important point that if you have any problem or you are struggling with any particular point related to your CIB or which batch to be used at this point of time, you can call on this number, that is 09240231030. This is our helpline number and here experts are there. They will guide you, they will help you, and then you can take the proper decision that which batch will help you at this moment. Yes, chaliye. So with this, let's start today's session. As you can see on your screen, this is the question from June 2023. Everyone. So which of the following statements about the Black Scholars model is correct? Now, the Black Scholars model is exclusively used for pricing European options. The Black Scholars model cannot be applied to the valuation of warrants as they are not options. See, the Black Scholars model can be used to value warrants because they are similar to call options, all the above. Now, here they are talking about Black Scholars model. So, this question is basically from your module D from the topic hybrid finance. Yes. From that topic, if you see, there are different types of hybrid finances we have, like we have preference shares, convertible debentures, yes, warrants, then FCCBs, mezzanine financing. These are different types of, you can say, hybrid finance you have. Now, in that, when we talk about warrants, yes, so how to value that warrants, you can use this Black Scholars model. Just remember the name, how you can value this warrants, because warrants are similar to call options. So with the help of that, you can value it. So correct answer of this question is your answer C. Direct question they asked in June 2023 about Black Scholars model. Yes, so this can be used to value warrants because they are similar to call options. Chaliye. Now, this particular extract is from your ABFM study material. So, applying the Black Scholars model, let's read what they have given. If one is willing to disregard the complexities brought about by dividends or any dilution, it is possible access to value the warrant by following this approach. Now, what is that approach through which you can value it, because there are differences when you are seeing your particularly warrants, like dividends are there, dilutions are there. Yes, so you can use your Black Scholars model is used for valuation of options. As warrant is like a call option, this model can be used for valuation also. So this is one common method which you can use to value your warrants as well as you can use for call options. Now, what are warrants specially? See, warrants are those type of instruments in which first you are giving one paper. Yes, first you will give the instrument, and on that instrument you are giving right to purchase shares at predetermined, yes, price, and in future when you have some specific date. So this is about your warrants. Warrants are a type of instrument. This you are giving to your holders who are getting the right to purchase shares in your future at some predetermined amount and at some specific point of time. So that is your warrants. Yes, so how you can value it? With the help of Black Scholars model. Coming to next question, that is which of the following statement about the green bonds is correct? Now, when we talk about bonds, yes, bonds are part of your debt. Now, what is debt? When you take any loans, that is your debts. Now, green bond is your sustainable project. These are what? These are your sustainable projects. So, if companies are, working towards this sustainability and they are working how they can save environment, how environment friendly goods they can produce, So at that time, if they want more funds, they can issue this green bonds. Yes, this is totally new concept now. Now companies are using or implementing any environment friendly project or any sustainable project, then for that, if they want any funds, they can issue this green bonds. Yes, chali. So let's read what are the points. Green bonds are financial instruments used to fund speculative stock market investments. Green bonds were first introduced in India to finance infrastructure projects. Green bonds are used to raise funds for environmentally sustainable projects such as renewable energy. SEBI has no specific guidelines for the issuance of green bonds in India. Now, out of these 4 options, correct option is of course your answer C, because these are the bonds which are actually issued for environmentally sustainable projects. As I already told you, if companies are working towards this point, like if you see electronic vehicle, yes, why we are now seeing more and more electronic vehicle? Because through that we can save our limited resources. Yes or no? So that is why if those companies wants more funds, they can issue this green bonds. So correct answer is your answer C. Now coming to next question on your screen, that is XYZ Limited issued convertible debentures with a par value 200 each. Yes, now each debenture can be converted into 8 equity shares at any time before maturity. Now what is the conversion price? Yes everyone, as you can see, this question was asked in July 2024 and that too without option question. So this topic is again from your module D, hybrid finance. In your module D, only this is your numerical part, yes, in which you need to calculate conversion price or conversion ratio. So now this is your homework question everyone. Please solve this and share your answer through comments. Let's see how many of you can solve this and how many of you can calculate this particular question. Chali. So let me tell you what is conversion ratio and conversion price. So basically when you are issuing any convertible debentures, now what are this convertible debentures? Means companies are taking loan from the public. Yes, so at the time of taking a loan, they are issuing debentures. Yes, when they are taking loan from the public, they are calling it as debentures. But after some time, if they are giving right also to convert it into equity. Now why equity is given so much preference here? Because when you are taking a loan, you are not giving any ownership. But as soon as you are converting into equity, you are giving ownership to those holders. Yes, so at the time of issue, you are giving or you are taking loan. But after conversion, now they are the owners of your company. So for that whole situation, we need to convert this debentures into this equity. So how to convert it? We require conversion ratio and conversion price. Yes, so let's read about these two things. So conversion ratio refers to the number of equity shares a debenture holder can receive in exchange for one debenture. Yes, same, you have conversion price per share paid by the holder upon conversion. That formula is par value of debenture divided by number of shares received. So this is about conversion ratio and conversion price. So based on this question, you can see they are asking about conversion price per share. Yes, means you need to calculate by applying this formula, that is par value of debenture, that is 200 and divided by each debenture can be converted into 8 equity shares. Number of shares received. So that is what? That is 8. So with this you will be getting your conversion price. Okay everyone, chaliye. Now coming to next question. Now this is according to section 54 GB, to claim a capital gains tax exemption, the net consideration from the sale of residential property must be A. Invested in government bonds, B. Used to subscribe to equity shares of an eligible startup, C. Deposited in a fixed deposit, fourth, donated to a charitable trust. Now see, this is the section given under your Income Tax Act, and this gives the benefit in case of startup exemptions. So what exemption here they are getting? See, if here you are an individual, okay, you are holding one residential property. Now, if you sell this residential property, yes, and if you see any gain, you need to pay tax on that particular gain. Yes, but if you invest this gain in some eligible startups, okay, eligible startups, you can get the exemption from this tax. So this is what given under section 54 GB. To claim a capital gains tax exemption, the net consideration from the sale of residential property must be invested in some eligible startups. Government bonds? No. Used to subscribe to equity shares of? Yes. Equity shares of eligible startups. This is the correct statement. Not in a fixed deposit, not in a charitable institution. Correct answer is your answer B. Yes, this is some tax exemption given under your startup. Next, as per the MCA relaxation in 2020, which of the following is not true about convertible notes issued by startup? Now, under that same tax exemptions that we covered just now, section 54 GB, we have one more exemption which you will be getting from MCA. Now, this is your Ministry of Corporate Affairs. So, what is that exemption? A. Convertible notes of 25 lakhs or more are excluded from deposits. B. Convertible notes must be convertible into equity or repayable within 10 years. See, the 35% deposit limit applies to startups issuing convertible notes. D. The relaxation applies to private companies classified as startups. Now, if you don't know about this particular point, let me help you in your revision part. So, basically, I am talking about this tax exemptions which you can see in your startup unit. Yes, so what is the relaxation? Under companies rules 2014, means this is given under now as amendment in 2020, that startups are exempt from deposit rules of amount more than or equal to 25 lakhs received as convertible note. Yes, and 35% deposit limit rule on aggregate paid up capital, free reserves and securities premium. This is the exclusion from your this amendment 2020. So based on that, now if you read which is the correct answer is your this point. The 35% deposit limit applies to startups complying. Achha, this is not the true option, yes, because notes are available, then convertible you can do within 10 years, and relaxation applies to private companies who are classified as startups, yes. But your wrong answer here is the 35% deposit limit applies to startups issuing convertible notes. So here your answer is answer C. Now next is section 80 IAC. This is given by Finance Act 2021, where they are saying your limit of the turnover increased from your 25 crores to 100 crores. Yes, during your first 10 years, in any financial year, if you are earning up to 100 crores, you can call your company as startup company. Yes, this is for initial time period, that too up to 10 years from the date of incorporation. That is your section 80 IAC. GB just now we have, covered. Okay. Next. So there are different types of startup financing as well. So there are basically three types, like debt financing, equity financing and grant. Grant means here governments are giving some intensive subsidies, yes. So that is what grant. Equities means you are selling your ownership of the company and you are getting amount. Debt means you are borrowing from, lenders. So that is what debt amount. So these are the three types of startup financing. First, debt financing, equity financing and grant. Yes, so remember these three are very important, and with this we complete today's session. Today I covered your module D, some important questions. So remember to revise it, and see, module D is pure theory module. Just one or two questions are there based on numerical. Rest of your part is pure theory unit. Yes, and this module is very important because in each and every attempt they are asking good amount of questions from this module. So make sure you are not skipping this module. Yes, you need to revise this 2 or 3 times, then only you can retain it. Okay, everyone. So if you have any further query or doubt, you can directly contact me through our Telegram group. You can discuss any points through this Telegram group. So make sure you are joining it. And as I told you already, there is one number. If you are facing any problem, you can call on this number. Experts are here. They will guide you. They will help you in your CIB preparation. Chaliye. Now, one more thing that, as you know, now we have only around 1 month for our CIB exams. Yes, so at this time, if you want to do one quick revision, yes, you can join our crash course. So for that, you need to visit our Adda 24/7 website. Scroll it down and you need to click on JAIIB CIB tab. CIB December 2025 is your attempt. Now, these are our crash course. This one is in bilingual and this one is in our English. So if you click here, you can see online, all live classes will be providing to you. And we will be starting this from 24th October. And we will be completing all your 4 compulsory subjects within just 1 month. Okay, as you can see here, we are starting from 24th October and you have your first paper on November end and December starting. So we have around 1 month only, correct? So as per that, we are going to complete all your important concepts. Yes, quickly we are going to revise under this. So make sure this is not your conceptual batch. This is one quick revision of all your important topics, calculations, numericals, and a brush up batch, you can say, in which you can clear all your small doubts or you can revise in just one go before exam. Yes, so this is our crash course, and if you want to enroll it, you need to click on buy now. But please don't pay this 3679. Before that, you can apply one coupon code, that is Y895. See, if you apply this, you can see here you are getting more discount and you need to pay now 3359. That's the benefit when you are applying coupon codes and you will be getting more discount by it. So with this, now I'm winding up this session. Thank you everyone for joining. Take care and bye-bye.